Right, apologies for that. Okay, welcome to today's webinar, everyone. I hope you've had a chance to read through the risk warning by this stage. Let's get right on with it. I should, of course, mention that if you have questions at any time, please feel free to shoot them into the questions box, and I'll address them as soon as I see them, or at least at the end of the webinar. So obviously the topic for today, how to trade while working full-time. I think this is something most people have to deal with. It's not often that trading is 100% your main source of income. It may be 50-50, it may be way less, it may be most of your income, but maybe some income comes from other streams. And even if it is, even if you are working full-time, trading full-time even, you've still got other commitments, family, friends, social life, other investments perhaps, that need managing as well. So the introductory paragraph that we put out for this webinar is day trading requires a lot of time and dedication, but there are ways to fit trading around a full-time job, family and friends. Trading 24-hour markets like forex or stock indices can be done with a 9-to-5 job or when working less regular hours. And I should say that actually just the stock market can be done can be done as well. So this is the way we're breaking it down in terms of topics. Just deciding how often to trade is a really important first starting point. Deciding the time of day, which is kind of related of when you can trade. Choosing the markets that would be appropriate for that time of day or most beneficial to trade at that time of day. And then I've got a kind of an overview of a daily process that both a day trader and a position trader might want to go through. And then just go through some tools for helping organize yourself to kind of manage trading alongside the other activities you've got via the LCG Trader platform at the end. So how often to trade? For me, I mean, this really breaks down to two pretty simple options. Admittedly, there are halfway measures between these two, but this is pretty much the ultimate choice. How are you going to go about your trading? Now, if you work 9-to-5 or something thereabouts, full-time, if you're going to day trade, so that's active trading where you're buying and selling multiple times within the same day and you're closing all the trades at the end of the day, you really need to be trading in the morning before work or in the evening after work. Now, that's going to vary according to everyone's schedule. You know, if you're already into the office at 7 a.m., you know, maybe, and then you obviously have to get to the office, get ready for work in the first place, or, you know, I say office, whatever your job is. If you've got a very early start already, maybe the morning's not such a great option. But, you know, if you finish a bit earlier, actually that gives you a bit more of an evening. Maybe that would be the time to explore day trading. Now, I've put in brackets or during breaks from work. Now, this depends on the kind of work you do. Some people actually have just almost a guaranteed prolonged stretch pretty much at the same time every day, free every day. So, you know, chefs would be one example. You know, when you go very mad during lunch and dinner, but between then you're actually kind of twiddling your thumbs a little bit. You've got a defined break. Well, in that case, that would be obviously a good time to do some trading. But that's, I would say, for most people, particularly people working office jobs, trading during breaks from work is very hard to pull off consistently. But the advantage of this day trading idea is that basically you set yourself, now it could be 1 hour, but I would say ideally 2 or 3 hours at the same time every day is dedicated towards trading. And that is your allotted slot for trading, and that consistency of the time of day in which you trade is hugely beneficial in itself. As tempting as it can be to, especially with the likes of mobile trading platforms, to be kind of in and out of trades all day in between meetings and things, it's not a consistent approach to your trading. And so how can you expect consistent profitability, consistent results if your approach is not consistent? So just allotting a particular time during the day really helps no ends. Now, a disadvantage of this is obviously you're only there for 2 hours in the day. Everything that happens in the other 22 hours of the day you're going to miss out on. So that is a disadvantage, but that said, you don't need to capture all the opportunities in the market to be very successful in trading. Now, option number two, which is something I tend to employ and what a lot of my market analysis webinars are geared towards, is position trading, or sometimes people refer to it as just set and forget. The two are not completely the same thing, but often intertwined. So this is just holding trades open for multiple days. So you're not opening and closing several trades in the day. You could open 2 or 3 trades within one day, but you're not looking to close them in that 1 day period. You know, some of them may run for a day or two, some of them may run for a couple of weeks, depending on how the market pans out and on your profit taking strategy. So this basically involves using end of day data. So if you're familiar with a candlestick chart, you're basically looking at a daily candlestick chart, and that only updates once a day, obviously. So you don't need to see what's happened within the span of that candlestick. Your decision making is purely based on that, where the market closed, based on where it closed the previous few days, and obviously whatever market news is going on as well. Now, a huge advantage of this is that there's less time commitment required, which obviously is kind of the whole idea behind this webinar. You're not trading as frequently, so you don't need to dig into those short-term trading opportunities. They're all of insignificance to you. You're just looking at the kind of longer-term picture. Another advantage that I've kind of missed out here, but I have elaborated on later, is that you can actually look at more markets this way. If you're trading very short term, normally it only makes sense to trade 1 or 2 markets, because you just literally can't spread your attention that thin. If you're looking at longer term price moves, you can actually look across a few different indices, commodities, forex pairs, individual stocks, without going crazy, because again, you're only looking at 1 extra candle per day. Disadvantage again is there's lots of economic news, etc., that's coming out during the day, corporate announcements, etc., that do provide big trading opportunities, and you're going to miss all those. I say you're going to miss them. You can't kind of jump in and out of them the way you can in a day trading, but obviously if you're trading from a longer term perspective, the profits that you can make from longer term trading obviously capture the general move of what's happened within the day, just not the gyrations within it, if you know what I mean. So time of day to trade. So the main point here is, okay, so the first slide obviously was kind of deciding what kind of technique, day trading or position trading. Now we've moved on to deciding the time of day. So again, back to whatever your job is and whatever makes sense for you. This is going to be different for everyone. But the point is, whatever time slot you think you have available, you can adapt the market you trade to that. So don't feel if you have to be working at 7 in the morning, have to wake up very early anyway, don't feel you have to trade in the morning. You don't. Because we do have 24-hour markets with LCG, you can basically adapt the period to which you're trading. So these is based on this little chart, very useful, picked up from a website, Forex Market Hours, which obviously is what we're kind of talking about here. Forex, and the same thing really applies for the stock market as well. Based on GMT, so if you're obviously a day trader trading full time and you're in London, you could just work this 8 to 4 period when it's the most active time for trading in London. But if you're working 8 to 4 or 9 to 5, then obviously you could focus your attention in the morning on perhaps some of the British pound and European currencies, also some of these Asian currencies like the Japanese yen, or Asian stock markets like the Nikkei in Japan, for example, or whatever the benchmarks are in Australia or China. Equally, if you're trading, if you're working during the day and then you're looking to trade in the evening, well, the US stock markets are still open in the evening if you're in London. So, you know, after work, you could be day trading US stocks, and it would be right in the active period of the day for New York. You know, if you work nights, obviously, you know, you've got that whole London period to work for. If you're somehow available right in the middle of the night, you know, you could be trading Australian markets as they open at 10, 11, 12 at night in London. And so this chart has been geared towards London hours, GMT. But obviously you can just adjust this whole thinking process to wherever you're based, and obviously and then just adjust the market. So, you know, maybe depending on where you're trading from, London might be your evening, so you might choose to trade UK stocks or European stocks in your evening time. But this whole idea can be spread throughout wherever you live. So the main point being, trade the markets that are active for when you're trading, particularly if you're doing a day trading approach. The logic being, there's more movement if the market is active, and spreads are tighter, so the cost of your trading is going to be lower if you're trading when these markets are active. So in terms of choosing the markets to trade, I mean, this is a bit of an arbitrary choice, to be honest, because you can, you know, this choice may change over time, but most people have a bit of a preference, and I would actually just fit them into two different categories. One being forex, indices and commodities, which is what LCG heavily specializes in, and two, the stock market. Obviously LCG offers a lot of spread bets and CFDs on stocks from around the world. But the kind of the way you go about these two different approaches is slightly different. So when it comes to forex, indices and commodities, the way I would recommend going about things is that you just choose your favorite markets and you stick with them. So some guidelines to that, and I kind of touched on this a bit earlier. If you're a day trader, so you're, again, if it's just those couple of hours in the morning or the evening, you only really need one or two markets, because any more than that's going to really kind of be difficult for you to follow. You could stretch it to three, depending on, again, how frequently you're trading and just personal judgment as to what your attention, how far it can be spread across the markets. For position traders, where again you could be holding your trades open for multiple days or even weeks, you can choose, I would say, even up to 10 markets, and that can be spread across forex, indices and commodities and bond markets and options and other things. And again, because you're only checking that daily price candle, 10 of them could be fine. Now, I would say if you're looking at something like 20, it's just hard for your mind to spread that far, and you may end up just missing opportunities, even when you're just checking a daily chart update. Keeping in mind, you've got to kind of really keep journals on everything you're doing, keep records of all the markets you're covering, and when it gets up more than 10, it's very difficult. And it's worth noting that a lot of the big hedge fund guys or big fund managers, they tend to have around 10 stocks in their portfolio. So they're diversified, but they've got some big bets on. And then for the stock market, it's normally slightly different, because generally the approach is not towards like a 24-hour market necessarily. It's not just trading in and out of the same market, which sometimes is trending, sometimes is ranging. You tend to look for stocks that you think are going to do well, shares that are going to do well. So often you'll use a scanner for that, so you can scan on shares that are breaking to a new 50-day high or 200-day high, or scan for stocks that are trading above their 50-day moving average, or scan for stocks that are releasing earnings in the next 24 hours, that kind of thing. And then you or simply you can just research a few companies that you like. There's a certain story, there's some news event around a certain story, and you do a bit of research, you decide it's a company you like, and you add it to your list and then look for a criteria for when you're going to buy in. So generally for stock market traders, a day trader would make this daily watch list and set price alerts, and position traders or stock pickers, you could also call them, would more like set orders and monitor the market. So at the end of the day, if you're a position trader, maybe it's 8-9 o'clock at night. You're not actually trading. Oftentimes the market maybe not even open then, but you set an order for when the market is open, and if the price gets to that level, then you're into the market. But when your trade is being placed, you're already at work doing something else. You're oblivious, but you've set that order to take place. And then every evening you come and monitor what's happening with your trades. Now I'll go into that in a bit more detail here. So this, for me, again, is not digging right into the details of actually how you construct a trading journal or digging into the details of a price trading strategy. That's all the subject for different webinars. But here, this is just a good, I think, simple division of kind of what you're doing when you're day trading. So say you've decided that you're going to trade for 2 hours in the evening. Step number one, check the news, what's been happening during the day. Is there anything worth noting? Some big change in interest rates, has there been some political shift in some way? Is there anything worth bearing in mind that might affect your trading and affect the markets you trade? And then typically for a day trader, you'd look at a 1 hour chart for kind of judging the general market environment you're in. That's sort of the longer term trend, if you like. And then you'd use the 5-minute charts, sometimes 15, perhaps sometimes even 1-minute charts for the actual trading signals. And you're just analyzing all the charts from your watch list. So that might be a few different charts. If you're trading stocks, it's normally 1, 2, or 3. If you're just trading the forex market or some kind of futures like indices or commodities. And then you're simply placing trades. Most of your time in front of the computer is spent watching these charts, waiting for the trade setups to materialize, and then you're placing market orders when you see your setup. And then at the end of the 2 hours, you close any remaining trades that are still open, close down the trading platform. Maybe first you would export the history of what you've done during the day, and just go through a quick review of all the trades that you've done. Were they wins? Were they losses? Did you do what you planned to do? So with little comments at the end as well, saying, this was a well-taken trade. Admittedly, it ended up being a loss, but that's because X, Y, and Z. Or this was not such a great trade. I probably shouldn't have entered this for X, Y, and Z. And that's all you need to do. Okay, and then the other piece of the pie is what you do at the weekend. That, for when you're a day trader, is probably slightly less of your overall time, but you would do some research on your trading method and general market analysis out there to see if there is some way you could learn and improve on your trading, and you would just update your watch list for the coming week. So maybe if you are if you're trading stocks, that might be when you're doing a bit of research on what stocks look good out there, and you would add those stocks to your watch list for the coming week. If you're trading some forex or futures markets consistently, then obviously it's going to be the same things, the same markets just pretty much remain in your watch list the whole time. But you maybe spend some time looking at maybe longer term trends, longer term charts to get a kind of broader picture feel on what you're doing in your day-to-day basis. So then I've done a different daily process, which is slightly different, bit more of a reorientation towards the weekend for what a position trader might do. So you've got your allocated time for trading. Typically for a position trader, this would be the evening. So a benchmark for a lot of the markets with LCG is basically the New York close, which is 10 p.m. in London, which is 5 p.m. in New York. And so sometime around then, when you've seen a daily candle, can be a good time to do it. If you're doing it in the early hours, it doesn't necessarily matter. Obviously, you know, the next candle will have formed for a few hours. But you know, candlesticks are just a way of viewing a constantly moving market. In the case of 24-hour markets, of course. So they're not necessarily fully representable, but ideally, you want to be reviewing the market near the time of the close of that daily candlestick. So what you do is just review all your open positions, because obviously, unlike the day trading, you might have some trades still open. Have a look at those. You know, are they panning out as you expected? In a set and forget trading style, whatever the market's doing, you theoretically should just leave the trade open until your trading plan dictates that you should close it, or in fact, you know, oftentimes just if your stop loss gets hit, or if your take profit gets hit, you know, otherwise don't close it early, is the set and forget mentality. And then when it actually comes down to the looking at the charts on a day-to-day basis, notice I've used the word review here. So you're basically reviewing weekly and I was hoping I could highlight, but I can't. You're reviewing the weekly and daily price charts for trade setups. Now, the idea being that you've actually done your main analysis at the weekend, and what you're doing here is just looking for setups near the price levels that you think could work as turning points in the market or breakout levels. And then you might place the trades. Now, oftentimes maybe the market isn't even open, but for 24-hour markets, maybe they are open. But still, you don't necessarily want to place the trade right at the close of the daily candle. You can do that. You can just, as the new candle opens, place the trade. Or you, oftentimes you can reduce your risk somewhat on the trade by using a limit or a stop order. So that order will be in place for when the price reaches that level. So in the case of buying, a stop order is above the market price. In the case of buying, a limit order is below the market price. And I'll go into that a little bit in the trading platform just on the next slide. And then a bit more emphasis of what you do at the weekend here for position trading. Now, it doesn't necessarily have to be this way. If you do have a couple of hours in the evening every day, you can obviously shift a bit more of the emphasis to the evenings than at the weekend. But the idea being that not a lot of your time really wants to be reviewing the weekly and daily price charts for setups, but you do need a sort of separate time for analyzing those charts. So that's why I like to kind of break the two up. One is a period of analysis, i.e. what is the trend, what are the areas of support and resistance, are we overbought and are we oversold, what's the economic backdrop, etc., etc. That's the analysis, and then the review is, has it got to my price level yet? Has it shown any buy setups yet? So it's two different kind of ideas. And then very much the same sort of thing for the weekend. You're, you export your history statement. Normally you've only placed, a handful of trades during the week. So you have a look at those trades, do the same thing, review the week's trades, make comments in the journal, do that analysis that I spoke about. Same thing, do some research on your method, market analysis, and update your watch list for the coming week. If in the case of trading stocks, you're again doing a bit of research on potential opportunities that you could hold a stock for a few days or weeks. In the case of the futures markets, like forex, indices and commodities, you've got your 10 markets you tend to follow. That again, that watch list is probably going to be fairly consistent. So these are some of the things I wanted to just quickly show you in the LCG Trader platform. Creating watch lists, creating one or more chart templates, setting price alerts, setting stop and limit orders, and how to save your trade history. These are all things that you can do which add convenience and save you a bit of time. So let's just jump over to the platform. So what was first on the list? Create watch list. So here is the watch list typically on the left hand side. You can make it bigger and smaller if you want, depending on how much emphasis you want to put on it. You can get rid of the watch list by this little icon up here, market analysis layout. That adds and removes the various elements from the trading platform. So say we want to keep it like this at the moment. These are the default watch lists, so popular, favorites I think is a default, and then you can add in your own. You see I've got one called My Fave, shares to watch, bit empty to be honest, but right here is this plus button is the easiest way to just create a new watch list, and you'd call it, breakout trades, or breakout markets, or something, whatever, some sort of characteristic of a certain watch list of things you're looking at, or earnings coming out, or earnings, earnings, etc., etc. And name it whatever you want to call it. Now you've got one called earnings, and then you're just adding markets to that particular watch list, and you can just type in, Apple. In this case, the earnings came out last night in Apple. Maybe add shares of Apple there to your watch list. So create one or more chart templates. So if you're using chart analysis, what you can do here is add the various indicators you want. So you notice on my chart I've got an RSI, I've just got one moving average on here, and I've actually got this fractal indicator on there. Just right click on the chart, and you can save the template and just call it whatever you want, JAFS 3. You can see that I've got Jasper template, JAFS temp 2, etc., etc. So the logic being that, for the different markets you follow, maybe you want different indicators. You don't have to add and remove those indicators all the time. Just literally click. We've got a few default ones on there for volatility, trend, and obviously different market conditions. Click on range. You've got a few different indicators on there, and you can obviously save your own variation of this. Setting price alerts can be really useful, particularly if you are amenable to the idea of placing trades during the day. Maybe you're doing the bulk of your analysis in the morning or the evening or at the weekend, but you want to monitor the market itself and place a live trade rather than perhaps use a limit order. So for that, you can just set a price alert. For the reason you might want to use a price alert over a limit order, for example. A limit order is if you want to buy, you say, let me buy when the market drops another 50 pips, and just automatically enter the market. You might want to use a price alert instead, because what if the market is absolutely crashing and it's gone down 50 pips, what if it looks like it's going to go another 200 pips down? Then you probably don't want to be buying. So actually maybe you set a price alert and you can monitor the conditions of the market and then think, yep, okay, market looks like it might hold this level I've been looking at, maybe wait for a bit of confirmation and then place your trade, maybe place a market order. So yep, this little here you can see, click on the price alerts down there and choose the market you're interested in looking for the alert for. Notably, so you can choose whether it's the bid or the ask price that hits a level. If you're day trading, you can still use this on a very kind of short-term basis. When you're day trading, you might care whether it's the bid or the ask that hits it. For position trading, that's normally only a couple of points, so it doesn't make too much difference which one you choose. And they choose whether the price is higher or lower and equal to a certain price. Price is lower to this, create alert, boom, and there's our alerts list. And there's our alert going off because obviously it was about 1 pip or 1 fraction of a pip away from the market, and we've closed it, job done. So setting stop and limit orders, as I mentioned before, maybe you don't you've decided that that level is the one for you, you don't need to wait for market conditions. You've already done the analysis. You think that's a good place to buy the stock, for example. Then you would just set a limit order, and you could do that in the platform. For me, tend to just choose the particular market from the that was me getting an email about that price alert. So obviously you get emails as well as just pop-ups in the platform. But either just right-click or go to the market itself within the watch list, or obviously up here somewhere. This is more for placing a market order typically rather than a limit order. I typically go to the watch list over here, and it's create a new order. And you've got the various order types here. I'm assuming most of you probably know how to set a stop and limit order, but so I'm highlighting it where it is again for those of you who maybe don't use it as often, but I'm not going to go through and place one if that's all right. And then the last one is just saving your trades in a history statement. Now, this is just nice because in this case it's I don't have any transactions in this demo account by the looks of it. I know this live account with zero money in it. But what you would in fact do is you just click on statements over here. So I've clicked on history, then on statement, and then obviously ordinarily this would be filled out with various trade details, and then you just click save it, and then that saves as an account. It's called account statement.csv, and that's a file that you can open up within Excel and do a bit of analysis of, see how your results have done. Why is that important? Because as I've written here, you can actually analyze that data, look at the average risk to reward, the win-loss ratios, and glean a bit of information about the kind of trading you're doing, and obviously adjust it hopefully over time to improve. I think I'm going to call it a day there. We're slightly over the 30-minute mark. I'm going to officially stop the webinar here, but David's asked me about how to do a trailing stop, so I'll cover that as well for anyone else who's interested. But otherwise, thank you very much for attending, and good luck trading for the rest of the week.